Okay, everyone, welcome back. So I've had a lot of questions when it comes to the weekly opening price and just generally how powerful this concept really is, right? So this is Euro USD on the 15-minute time frame, and I'm really going to be showing you how you can simplify your trading. So this will be about a 10 to 15-minute video. So the purpose of this video is to allow people and to give them an indication as to how they can increase their strike rate, get funded, reduce losses, and also reduce the amount of time they spend on the charts. Because I understand I get a lot of people from around the world with 9 to 5 jobs or with children or with other commitments, which essentially restricts their ability to trade on the charts. So to quickly break this down for people, we're going to be going over a few things, right? So stick with me to the end of this video and hopefully you'll get your questions answered because this is a very popular topic. So we're going to be going over the first thing is the weekly opening price. So we're going to be understanding why this price is super important. The second thing we're going to be understanding is we're going to be pairing the weekly open with the rest of the ICT concepts that people need to know. And in this video, I'm going to simplify those concepts down to the only ICT concepts you ever need to know. We're going to be looking at market structure, or specifically market structure shifts. We're going to be looking at fair value gaps, and we're going to be looking at, last, is liquidity, right? But all of this is in conjunction with the weekly opening price, right? So what do we mean by the weekly opening price? Let's dive into this video and let's understand what we mean by the weekly opening price and how you compare that professionally with time. The real secret when it comes to ICT, before we go further on and look at the charts, is understanding this in front of you. Now, this is the economic calendar for the week, right? So Monday the 22nd all the way to Friday the 25th. So from here, what we can see is that the only news events corresponded to Thursday, right? So if we go back to the charts and we load up the charts, we're going to be going over a specific trade from Thursday. Notice that we had the volatility down here in the London session and the New York session. So that volatility corresponded to euro events and dollar events. So the first thing I want people to take away from this video is when you study the economic calendar, sorry if this loads, the economic calendar is essentially telling you where you want to be getting in and where the reversals are going to be, right? So we see over here Thursday had the highest amount of red folder news. So let's get into it. So if we start over here, the first thing I look for with the Euro USD is essentially that weekly opening price. So we're going to be going now to the Sunday. So if there's one thing you take away from this video, it's very, very simple. When we're looking for trades, we want to be positioning ourselves in line with the weekly opening price. And it's super simple. This line over here is where price opened up for the week. And your job is to look for high probability buying opportunities below the weekly opening price, right? So let's go into this in a little bit more detail. Now, when we zoom into Thursday's price action, I want people to understand how price actually behaved near this area, right? So again, we are looking for reversals in line with the economic calendar. So the calendar suggests that the Thursday will give us the highest probability news events, right? So my understanding is the way that I teach my students is that you want to be trading after London news because the London news is the most volatile, especially when it comes to euro, which is what was happening over here. So now, if we just go back to the charts, I'm just going to replay price and we're going to really dissect what was going on and how I was able to make over $1,000 using this one simple trading strategy. Now, I call it the power of four, and we're going to be understanding what the power of four is, right? So if the week is bearish, right? So far, Monday through to Wednesday, we've had quite a bearish week in line with the higher time frame, which is indeed bearish. Now, when we see Wednesday's price action, there's two things I look for when it comes to Wednesday's price action. The first thing I look for is I want to see price either sweep Wednesday's low or respect Wednesday's fair value gaps. So either we see price respect this inefficiency before ultimately Thursday heading higher, or I want to see Thursday come down and actually take out Wednesday's low before giving us the power of four, which is something I'm going to speak about in a bit. Now, if we just play price on, what we ended up having was we had, of course, the Asia range. And this is what's really interesting. So this actually corresponds with the news events, right? So we saw this is what we call the ICT Judah swing. So the ICT Judah swing is the low of the day for a bullish day, right? So the low of the day for a bullish day. Notice where price actually reacted from. Notice how price behaved the way it did, right? We saw price come into a fair value gap. So that's the first thing you want to understand, right? So price came into this inefficiency, remitigated into the fair value gap before heading high. So that's the first thing to understand. Okay, so what constitutes the power of four? Now, when we use the Asia range, right, I often get questions about the Asia range as well as the weekly opening price. The Asia range is essentially the accumulation. This is the A in the AMD. The accumulation is essentially, the accumulation stands for accumulation, manipulation, and distribution. But the accumulation itself is 7 p.m. to midnight Eastern Standard Time, right? So 7 p.m. to midnight Eastern Standard Time. Notice how we have a very aggressive move to the downside. This is in line with the news event. So this is a news event and this was a news event. These two candles were a news event, right? Notice how we've left a fair value gap or an inefficiency in this region. So price has left an imbalance over here. So this is the London imbalance left after the news events. And this is the secret to understand. When price has news events in the London session, you want to actually wait for price to play out, let the news events dictate what's going to happen because the news events are the manipulation, right? In this case, accumulation, manipulation, and distribution. But the top tip to understand, your manipulation will come as the London news events play out. And that's exactly what happened over here. What makes this high probability for buying, right? What makes this high probability fair value gap? Well, there's a few things. The first thing is that we are below the weekly opening price. That is the first thing. When price is below the weekly opening, you are in a position to look for buyers. That is the first thing. First, we're looking at the weekly opening price. That is the first thing we're looking for. Weekly, I'll just write OP for short. Weekly opening price. The second thing we're looking for is we're looking for a power of 3 or a power of 4. In this case, we see a power of 4. What makes it a power of 4 is that we have a two-phase manipulation. So we have accumulation, now we have manipulation phase 1, and we have manipulation phase 2. So this is in line with the ICT accumulation models, right? So that's kind of rule number 2. Rule number 3, right? We want to see price giving us a fair value gap in a discounted region. This is what we're going to be going with. So we want to see a discounted fair value gap. And what do we mean by that? Right? So if we just allow price to retrace back into the zone, what we're seeing over here when we look at premium and discount, we have our swing low and we have our swing high, right? Notice our price does dip in just below the 50% level. So price has come into a discount. Now, with that being said, with all the rules ticked, our job is to understand we're simply aiming for the previous day high. So this in itself is the previous day high because we've already taken out Wednesday's high. So we're simply aiming for Tuesday's high, right? This is a very smart place to take profits. And the reason that's a smart place to take profits is because the higher time frame is bearish overall. So when you have a higher time frame that's bearish, it's not a wise thing to hold your positions. Right? So you don't want to hold any kind of position to the moon. That's not how we run, right? That's not the best way to trade, right? So once you have that in place, again, your stop loss, you want to have it you can either have it at the Judah swing, or if you want to be a bit more aggressive, you can kind of have it a little bit further up, a little bit kind of halfway. So if we just play price on, this is roughly a 1 to 4 hour trade. I believe I capitalized about 1 to 3 on this, I believe. So if I just continue to play price on, we're obviously going to rally to the upside, and Friday gave us the target that we were looking for, right? So price did eventually come in and sweep the Tuesday's high the way we've seen, right? So again, this is a quick overview as to how I trade, right? So to quickly sum up this video, what I want people to understand is that your trading needs to be as mechanical as possible if you're looking to, get funded or scale personal capital or go for investor capital, right? Things you want to understand, right? The things I'd like people to take away from this video are the following. You want to be buying below the weekly opening price, right? So when we take a buy trade, or when I take a buy trade, it's always below the weekly opening. This is the highest probability area. So buy below the weekly opening, right? That's the first thing. Sure that all your fair value gaps come after news events, right? So you want to use the economic calendar and you want to be trading after news events. This is the most important thing. And the last thing you understand is that you need to understand that you want to see market structure shift and fair value gaps together. So if you don't see a key market structure shift, so in this case, you see one just over here, or you see another one just over here. If you don't see market structure shifts, your trades are not valid because the market, the higher time frame, isn't predicting or isn't going in that direction. So it's important to understand you use all these things together and you don't really need to spend more than about an hour a day on the charts, right? So the trading strategy that I've made for people allow them to get funded with as little time as possible, both in the challenge and also on the charts as well, because trading should work around your lifestyle and your lifestyle shouldn't work